Markets getting a boost. The Federal Reserve announcing $2.3 trillion in additional monetary stimulus yesterday. Investors starting to see some light at the end of this fight when it comes to the coronavirus outbreak and the national and global shutdowns. All the major market gauges were up, with S&P 500 had its best week since 1974. Joining us now, J.P. Morgan Private Bank Global Investment Specialist Stephen Rees. Good to see you. Stephen, what do you make of this? Is the market telling us something or no?
Well, I think the market is looking at three things. One, the fiscal stimulus that we've seen from all the governments around the world. Two, the Fed actions, which has stabilized credit markets. And then three, they're looking for any signs of stabilization on the cases. And I think that's where we've seen some glimmer of hope here in Europe and some very, very early signs of hope in the U.S. And so I think the market is starting to price that in. I do think we're going to have more volatility ahead. I don't know that we're going to see a new bottom, but we could potentially go back and retest the lows in coming weeks and months. And so I think we need to be prepared for that. But there is a lot of hope out there now that we can recover from this and get back to work.
John Hilsenrath, get in here.
Stephen, I'm looking back at March 2009 when the market suddenly turned when the Fed launched its first big QE program. It turned and it was a steady march upward for most of the next decade. And investors who got in then made a lot of money. Do you think it's going to play out that way again this time, that there's going to be a turn in the market and we're going to get a steady march upward? Or is the pattern going to be different this time?
I think it's going to be a little bit different this time, just given what we're dealing with and sort of the fact that it's impacting every country around the globe. But I said it last month when I was on the show, and I still believe it today. I think the markets are higher a year from now. I just think the path to get there in the next few weeks and even months is going to be bumpy. And so I think having dry powder in this market is important. If you felt like you had too much risk going into the sell-off, now might be a good time to start to trim a little bit so you can take advantage of adding if we see more pullbacks in the coming days. I mean, there's places like the healthcare sector, technology, where there are a lot of companies that I think aren't only going to survive this, but they're going to come out a lot stronger based on the changes that we're all living through. And I think a lot of those are going to end up being permanent.
Stephen, J.P. Morgan issued this forecast looking at it predicting a 40% economic contraction this quarter. You say there, what do you make of that? And I can't believe I'm going to say this as a financial journalist, but these numbers, the big, they really don't matter. We know that the country has been shut down. We know that a quarter of our output, at least, a quarter of our economy is shut down. That you've got 1 out of 10 American workers already filing for unemployment benefits. Do the numbers matter? It's more about the solution to get those people money in the interim and then back on the job.
Yeah, I think you're right. I think it's more about the solution, and it's more about how quickly we can get the economy back up and running. So you're right, we took it down to 40%. I think to some extent the market's going to give a pass on all economic data. I can't imagine that the upcoming earnings season is going to really shed any light on anything. But I think once we get to May and June and July, the market will be looking for signs that we are in a rebound. And so while I think it's going to be tough, we think April will mark the bottom from a global economic perspective, with a pretty sharp rebound starting in the second half of this year.
Stephen, good to see you. Be safe, my friend. Be well.
Great to talk to you. Thanks, Dagan.